Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, September the 8th, 2022. An interesting day, actually, in the markets as I was requesting more clarity in terms of direction and kind of got a little bit of both. And instead of really adding to the clarity for the immediate turns, it kind of clouded it up a little bit. And there was just some very strange trading intraday. But what I did talk about briefly on the last update was that courtesy of one of my subscribers here on YouTube, they had suggested what would the probability be for what's taking place so far from the high at 43.27 down to the low that we reached the other day at 38.83 or 88, somewhere in there, 83. And that actually formed intermediate wave 1 of primary wave C down. And at first I thought, no, I've had a lot of trouble with some of these internal counts, but I went over it again a lot finer, a lot closer. And I actually now am going to demonstrate or show it because I do believe that it was initially how I first started this count coming off of that high. And what detoured me was the expiration cycle 2 weeks ago that just nosedived. The market nosedived basically because of Powell's Jackson Hole speech. But still, the market took a very heavy turn, and the S&P was down over 100, the Dow was down 1,000, the NASDAQ was down 500 plus. So it was a very strong down day. Now, I have gone back, and it really appears that, yes, the entire cycle off of that 43.27 high is actually 5 waves of minor degree. So I want to kind of present that. And what I'm going to ask is basically it cleans up what I'm giving as the two possibilities. Both of these contain a continued up move. What this one, which would be that this low at 48.83 completed an intermediate wave B as a part of that larger primary B. So instead of primary B being complete here, this particular count suggests it still has this rally to go, and that would suggest that the C wave, this would be, is going to get above 43.27. Otherwise, we have now this one. Now, as of yesterday's count, what I had left it as the end of intermediate wave 3. And so I've stepped back, taken a look at this, and realized, to count that, and I even spoke to it, that I felt that it's like one of the biggest problems I find with counting these bigger corrective waves is counting too fast. So I had to determine if I'm really thinking and believing that the primary C wave, which still would be the one in control here, is got a whole lot more to go than counting this move on an intermediate degree because of how it came started, that it would not, and again, because of this, it just didn't fit. Then I went back and recounted it as minor waves, and it does work. And so I want to talk about that right now. So in other words, again, we're just taking a look at the high that we had on August the 16th at 43.27, down to the low that we were at in yesterday's Globex session, I believe. Yeah. And that was at 38.83. So that can count. And here we go. If I'm looking at that as intermediate wave 1, what's inside of it are 5 waves of minor degree. Here we have minor 1, minor 2, minor 3, minor 4. Does not overlap, so it's clean. Then we have minor wave 5, and that subdivides. Now, yes, this gets a little tacky, but I tell you, I counted out that third. It is not that it's a 3-wave, it is definitely 5 inside. Wave 1 is the longest wave, and wave 5 is the shortest. Wave 5 is going to be the most problematic because it is truly ugly. Truly, like from here to here, the balance is like, oh my God, this. And then suddenly that rally was almost, somebody turns and says, oh my God, you forgot to put these cells through. Oh, okay, boom. Whack it down and then start buying it. It made no sense how it was traded when it happened. So I want to also just include here, Elliott left a really good guideline for analysts. In fact, he said for analysts, if you have gotten it down and whittled it all the way down to it's either this or it's nothing, and it's not like this is the best count, everything else fits. The whole pattern 1, 2, 3, 4, 5 fits. This overlaps, yes. So it still doesn't fit to where we've got a triangle going in there, but we have nothing else to go. And wave wise, we have a 1, 2, 3, 4, 5. Wave 1 is the longest. Wave 3 is not the shortest. Wave 5 is. So as far as a 5-wave impulse, it fit. The 4 overlaps? No, it does. Not the original low, but on the gap in Globex. Still counts, but I am going to allow it. The rest counts out. This being as like funky as it is, we have to allow it because now we're getting above this level. So up here, we're now beginning to get ready to move above it. In fact, I would expect us to move above it. Okay, so here we are. Now we're into that. The other count, which would then cover this, right? There's the intermediate B. There's the A, minor B, minor C for intermediate wave B, and now we would launch. So how would we count that? This is a 5. That would be 1, but minor 1 of intermediate wave C. So we already know that wave C should take out the high of wave A, which would be here. Again, not changing it because I still believe that it's not going to happen. It's truly, I'm shifting some of that probability over to the decline kicking back in. There's way too much going on in the world. And it might pause. It might pause for a couple other bigger things where, emotions need to go. So let me put it that way. In any case, what I now want to add to this for the discussion, let's talk about where this all could go, because here is primary C wave down. These are the fibs for that primary C wave down. Let me go back out to the daily and let's take a look at them, right? Because we've only really buffeted up against an absolute minimum and not even counting out of anything other than its Fibonacci support, which should get broken. And that's at 38.80, so 81. And since we got down to 83, it basically kissed it and now we're running. So a lot of maybe misunderstanding, but Fibonacci is Fibonacci and it's reacting as one would expect when reaching fib support. But it doesn't suggest that we're now finished and we're now going to go back above that high, unless this is an intermediate B wave. Because against that, if this is A, the B wave would be compared to the A wave, and it came down and bottomed 0.382. Now, granted, it had tons more room to come down further, but it didn't. So that part all fits, and therefore that fib. Now, if we're going to go further, that would be the other count. We go up in a intermediate wave 2 of primary wave C, and then we turn and then we drop very strongly yet again. So I know that this stronger downside is sitting up there. It's still out there. It hasn't been triggered, but it is out there. It's all a part of this picture. I have to tell you, it's like what we're creating here is just this launch pad for what is going to hit. And in the meantime, it always seems to be, it's like, well, we should bounce, we should pull back. And no doubt we should. And now they're going to add to it because the structure itself, when we go back to the hourly chart, the structure itself tells us that it's in 1, 2, 3, 4, 5 up to this point. That's the high. It was rejected, but it's still the high. So this can be wave 1 of that larger C wave, or it's wave A, but it's a zigzag, right? If it is intermediate wave 2, it consists of 3 waves of minor degree to be labeled A, B, C, or there's possibly B. Not sure yet, but here we are sitting right at that high. In fact, the body of the candle, there's the body of this candle. So this is just a tail. So the market has gone up. So either this A is going to be put here, and we still got to go through that B wave because this was funky. You know, this sudden sell off, but nope, not really, boom. And this one came down here before it went, oh. And this one only got through the EMA. So just a strange day in the way things were traded and the way that they were putting in the orders. And that kind of really goes the opening. Oops, we didn't mean to go that far. Boom, they go up here and then boom. And then, oh, we did. Boom, boom, boom. Oh, we're not going to go all the way down. It was very strange. But in any case, what could be, we still have to allow for, we're in this 5 waves up to put in minor wave A of an intermediate wave 2 rally. Now, I want to go back out a little bit. Let me go to the 4-hour, open this up. I need the B wave so I can put in what a C wave could be. But what I can do is go and put in retracements. And if I put in the retracements, I can get an idea. If I'm satisfied that the market is bouncing off these levels, then yes. And I am. I'm just not going to say whether it's a 1 or whether it's an A. I'm balancing more towards the A. And that then suggests here are the fibs for a second wave. Waves 2 can be unpredictable. They can really give us a little blast. They can give us a little push. Well, minimal push would be 40.53 to 41.05. The full-blown 2 can get us up to 41.58. It can get us as close to 43.27 as it wants to. It just can't exceed it because then it's not a second wave correction of wave 1. But it can get close. So it can power for a little bit. Tomorrow's expiration. Hey, lots can happen. We've seen it. We've seen it this way, where everyone's thinking, okay, this was Powell. He's going to save the world. He's going to tell us all this wonderful things after this big meeting with all these other high-profile people in finance and the economies, economists. And we got this. Now we may get it going in the other direction. Again, expiration. So we allow for this, the move. And now the move will make more sense. I was ready for it to continue higher today, but they had other thoughts and then suddenly at the very end of the day, they power it again. So we're seeing a lot of retail come in, but retail via probably 401ks and IRAs. And they're kind of like, okay, we need to move the money. Let's move it now. So maybe they've been keeping it in cash and now they're saying reinvest. I don't know. But a lot of crazy things go on. And what I can say, thus far in our corrective process, that was a rally. That was this big butt rally to complete our C wave and then the primary B. So, yeah, the market can do these things. And overall, it's a downtrend. So here we are again confronting a second wave rally. Here are our levels. If it should turn and just start getting slaughtered and come down, I actually would not look for it to break that level. I would believe that maybe this is just, we're finishing the A wave. We're going to come down in a B wave and then go back up in a C wave. And then that C wave would still be expected to take us into these resistance zone right here from 40.53 to 41.58. So we've got about 100-point range, 105-point range here to put in a high and then turn, because that would complete that, not this. So the turn, if it comes, this is where we'll be able to tell which one is in force. If it's that one, this gets taken off and it's going to start up above. It would not be in process yet. So that, again, so now at least I'm narrowing it down to limitations on what each side can do at what level, and then knowing where we're going to end up ultimately, because we'll know, because at least now we're working on an intermediate degree level on both view 1, view 2. They're both intermediate degree. So that helps when we're giving these types of numbers that they fit both. And where we'll find out is once it possibly could be over, the reaction, if it's the wave 2, and the reaction would be a wave 3, and it should just take a nosedive. The reaction here would still be, we did 1, 2, it would be in the third going up, but I wouldn't be expected, it could stop there, but we're not looking for it to just nosedive down. So we're constantly going to be on the lookout, but we have to allow for these moves. Again, if you're a day trader, you should play it well and stay totally open to the funkiness that the market's going to go through. By the way, just so that you're aware, the December roll has begun. So what I mean by that is that we're going to roll, everybody's rolling from September to December. So if you're carrying a position and you're not going to get out of it by September expiration, then you've got to roll your futures out to the December cycle. Maybe your options as well, but you're going to be rolling it out. That's going to have a play in sudden jerks and pushes in both of these markets. The rule of thumb still remains that you transition over to the December contract yourself, even for day trading, once the volume in that December contract is greater than September. Then it's like, it still might have these little zip-zap moves, but that's when it shifts, and those zip-zap moves are going to be worse in the September contract versus the December contract. Okay, enough there. So for tomorrow, expiration, I would anticipate one of two things, and I know it sounds wishy-washy, but I got to go with it. If we're finishing a wave A and we do it up here, we may put in a quick B wave and still end up going this way. So both parties might get their way here. So in other words, if wave A continues up and we're sitting up here and then turn and start to come down, we're going to trade it, of course, because we're going to get signals to trade it, but I won't be able to tell you that it's the B wave or it's completed the C wave or whatever, because I need to see the structure. But if we come in tomorrow and we're starting up here and it's going to look like it's going to get labeled wave A, well, then we still have a B wave to do. And you can run quick fibs from the bottom to the top, and they're just retracements to what's coming down. That's also going to protect you in terms of where suddenly if you start seeing breaks, what else it could be. Okay. So to be honest with you, downside, yes, I don't want it to take us by surprise, but keep it in gear and stay open. You're not going to be trading off of a 4-hour chart. I don't think. If you're a day trader, you're likely going to have this guy in your face. And that was today. And so when you were trading that, okay, that's great. We're going to go up. No, we're not. We're going to go down, 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 down. What are we doing? I got caught there. I'll tell you that right off the bat. Didn't think it was going to go that far. And it sure did. So buying it and hold, but not even buying it and hold, buying it and stacking it up, thinking, okay, it's going to hold here. Okay, it's going to hold here. And then when it doesn't, oh my God, it just kicked my butt. So I am saying stay open simply because of that. The market basically will tell you, even on a 5-minute chart, that's a big bar. That's a big 5-minute bar. You don't sit it out. When it starts breaking and it's not stopping, just get out and go with. Because whatever you've lost, you're likely going to make it back. And you have to have more confidence in the short than the long at that moment. And here's why. Take it down, but they did come back in. And therefore, you want to stay open to getting those signals that it's going up. This market, when it was happening, gave us signals that it was going to go down. It broke the 8. It broke the 20. It broke that support. It broke the 50. It's going down. Don't stay in the trade. When then it breaks the 200 and you're like, get out of the way. Not only did it break the 200 SMA, it broke the 50 SMA. You don't want to be there. But guess what? Here it is coming back in the other way. And when it broke, it broke. That's a 5-minute bar. They decided to just take it. They come in and bought it. Okay, fiddle around, come down, and then bought it. And into the close. Look at that. Buy on close. Okay. And it took it right back to 4,000. So these are great pushes and they're tradable. But you have to kind of keep things in gear and the bigger picture, because we're working off a 5-minute chart. Beyond that, you got to leave it there. Go take a look at it afterwards. Right now, you got to trade what's in front of you. And the price action is telling you we're going up. And then again, if you're running this on a volume profile chart or an order flow volume profile chart, you're going to see points of control. You're going to see value area highs, extended value areas. You're going to see things move. When they just jump and you see point of control is now jumping up or the point of control is jumping down, you have to be able to follow that. Every last one is a signal on something. All right, so that's it for the S&P. Now, moving on to the NASDAQ. It really is the same story, and it's going to really kind of fall in line with the same picture. So here we are. We have this being the completion point for the minor 5, the intermediate wave C to the primary wave B. The alternate is that this is not primary wave C, but the top for intermediate wave C is for intermediate wave A, and this is intermediate wave B, and that's what this one view. I'll put it as number 2. And so, but I went over, and the same thing I did in the S&P, I'm now doing in the NASDAQ. So let's take a look. Off of that high, minor 1. And again, to get to intermediate wave 1, I had to bring everything down a degree. So minor 1, minor 2, minor 3, minor 4. And it's the 5th wave. It's minor 5 that actually extends because that first wave includes that strong down day. Minor 1, 2, 3, 4, 5. Again, this was the funk. This I have to allow just as it did, and this does count as 5. So overall, same. Wave 1 is the longest. Wave 3 is longer than wave 5. So it all fits Elliott-wise. So we stretch a rule here or there because in actually the same thing kind of is. I'm sure I could find somebody that would say I can get a diagonal out of that. But, and it wasn't too low, and it wasn't too low that suddenly blasted right off of it. So plus. Now, what are we doing as we come off of this low, which was yesterday's GlobeX session? So we are launching higher either in an intermediate wave 2, or we are blasting higher in an intermediate wave C. What does that mean for the inside? Well, either this high may have completed minor wave 1 of intermediate wave C, or it's completed minor wave A of intermediate wave 2. So again, on a degree level, same type of movement we can get from either one, an A wave or a first wave. So we're going to walk it all up, or we're just going to go, but we have to continue to trade what's in front of us. So that means, what does that suggest for what we're doing right now? It suggests, just like I said in the S&P, that there's a possibility that this A wave may come in a little bit higher. And that would also include wave 1. That this all extends a little bit, got a little funky, but it might extend. If not, then this is A, and we still got that B wave to do. Right? A, B, 1, 2. So we still got both of that, and then we're going to get a C wave or a third wave, and then we'll be able to put some in place where, okay, what comes next? But we're not there yet. So I think we still have additional upside before that. Tomorrow again, expiration. So let me pull up in the 4-hour chart, open this one up a little bit, and let's get some fibs going for what we could be in for. And again, I don't need that. I'm going to go like that. What I want to do is I want to show the entire wave 1 so that we're looking at the retracements for wave 2. And then once that is in, and we got a top, then you can run extensions for wave 3. Or we'll be running extensions to get the next up wave. So let me put this into place. And that would be down to there. And so what we're looking at in terms of an intermediate wave 2, 12,617, 12,830, 13,045, right? 382, 50, 618. What comes in right above 382? The 200 for the 4-hour 200 EMA. What comes in at 12,881, which is just above the 50%? The 4-hour 200 SMA. The rest, just fib resistance. And that can be throw over. So yes, from where we are, we got some rally to do. So my brain is going to be more focused on, yep, we still could get a B wave, and yep, on a 5-minute chart, a 3-minute chart, it's going to be tradable. So you want to be able to play both sides. Again, keep open. Use the tools that you can just hone in on that small period of time. Make your money without being like, well, they could just step in and really sell it. It's like, yeah, they could, and you should be able to notice that and get out. Not make the mistake that I did, being more complacent about it, to be honest with you. This was all foreseeable. In terms of once it started, it was like, wow, they're really going at it. Why would I hold on? Because I was being complacent, like, oh, well, the buyers came in there, the buyers will come back here. It's just a small pullback. Well, then it just keeps going. So again, work with an area where your trade becomes invalidated and you just get out. And you may want to just turn and go with and make your money back and then some. And it doesn't necessarily have to change your strategy should the market really decide it is going to move higher, and do it with a little bit more purpose. Like you get a buy order, another big buy order, another big buy order, and they just kind of push. No one's asking anybody, if you're a day trader, you're coming in to trade this thing, starts at 12,195, runs up to 12,306. Nice move. I'm not saying you can capture the whole thing. Very, very, very few actually do that part. But you can grab many parts in between. You're talking 30, 40, 50 NASDAQ points, right? $20 a point. 600, all right? That would be 30. 40 would be 800. So you can work your math. If you are capable of holding on, if you are just trading in and out, it's still workable trading. Okay. So I think that we would still have some upside to do, but right now, this is kind of still, again, like it was in the S&P, a little funky. Tomorrow, it obviously will be cleared up, and it probably will clear itself up overnight. But now we have some parameters for where upside moves can go. And we have positioning with right now on our hourly chart. Here we go. This broke these others, but it held those 50s, and now we're holding them, and we're holding above, and now we're holding above the 20. And now we're trying to, and getting above, it'll open in 4 minutes. We want to get above and stay above 33, which is where the 200 EMA is sitting, the hourly. 200. And we're looking like, well, it's pretty wide bid offer right now. In any case, I think it's going to be very tradable. I'm hoping that we'll have some decent volume due to expiration. Again, be leery tomorrow because the roll will continue. And it's not so heavy in the NQ options, but you don't know. And so again, you're going to want to switch contracts in the NASDAQ from September to December. And that would come, of course, it's gone. Once the volume is greater in December than it is in September. That was not prevalent today. In fact, it was not even close. So I'm going to leave it all there before I really get going. And wish everybody a great trading day tomorrow. I'm hoping that it's going to be, so we're going to be alert. Distractions got to stay away. We got to keep the mindset focused on what we're doing in front of us. All things are possible. They truly are. Be patient, be cool-headed. Don't fight the market. Our next update will be on Sunday, September the 11th.